Boom, we are alive, ladies and gentlemen. Happy Monday morning for y'all. It's nighttime here in Dubai. We're taking a look at Bitcoin, the rest of the alternative assets, and a quick look at the S&P 500. We're going to keep today's video update short because not a whole lot has changed in the market at the moment, but it does look like we're going to see a middle-of-the-box trading range. So let's just dive in, take a look at what that might look like. So here we are, Bitcoin on the daily. In the previous videos, we had been watching the 200 simple day moving average bounce. We stayed above the bear claw here, or the exponential moving averages, highlighted in this nice teal green color. I suspect that we're going to come down and try to visit this range one or two more times. If we look on the 6 hour, something like this. We're right at the middle of the range. So this is actually a really crucial area that we're in right now. One of the reasons being we've had what appears to be our primary support, our shakeout, and our test. So I'd like to see probably a revisit of 63,000. As we go over the other assets, you'll see why that's probably important and what it means for the rest of the market. One of the things I wanted to talk about, we'll save for the S&P 500, which is the last thing, so make sure you stick around to the end of the video, is just the market macro perspective in general. I think S&P will help us out there. Again, one of the things I think that's very likely to happen here is that Bitcoin effectively moves up to the $72,000 area to try to wipe out the majority of the leverage shorts that are taking place up there. We've gone over this in a few of the previous videos. But one of the things I think that's important is really trying to understand that market dynamics are driven by human sentiment. Even though there's a lot of computer algorithms and trading that takes place, those are all based off of human sentiment. And push comes to shove, people will get in the way and take the algorithm out effectively. Algorithms are basically useless without humans because nothing really exists. If you were to remove humans, the value of all the things that we understand it would basically cease to exist. Also wanted to go over this chart here by our friends at Look Into Bitcoin, who recently rebranded to Bitcoin Magazine Pro. I'm not sure why that happened, but nonetheless, this was a nice rainbow chart indicator. As you can see, the majority of the time when we are down here in the blue, we are in a fairly decent buy area, general accumulation. And again, this is pretty consistent across the board here. So as you can see where we're at right now, we're just kind of breaching in between the buy and fire sale territory. Pretty much anything above $70,000 to $120,000 is going to be strong sell territory. I think we probably go to around $120,000 in this market cycle, but we could revisit lows before that happens. Now, we kind of talked about this in the past, but the idea that Bitcoin could come all the way back down to the $30,000 mark to try to wipe out the leverage there too is not out of the ordinary. We've seen stuff like this happen before where the market is just really trying to get rid of leverage shorts. Now, a lot of people said in the comments like, oh, you're contradicting yourself by saying that's not manipulation. That's not manipulation. It's just big money selling and buying. It's clearly difficult for people to understand, but that's how markets work. So if you're just how markets work, you can't call it manipulation. It shows a lack of intelligence. Although I guess after understanding the nice bell curve of IQ, it's understandable why people gravitate towards that emotional language and also why people use it. I should say, actually, this video is going to be titled Bitcoin Manipulation, and it'll probably do really well for that exact reason. There's just a majority of people that fall within that bell curve, but that's not manipulation. That's just standard buying and selling within the market, and that's how markets move, and big players want to do that on purpose. Now, you might say, well, they're manipulating the market by selling. Well, no, they're not. They're just selling, which may make you feel like you're being manipulated, but that's just how markets work. So I try not to veer into that type of verbiage, or it just doesn't fit the lexicon of trading effectively. Manipulation to me would appear more under the idea that they're specifically doing something. Like, we could make maybe an argument that gold and silver have been manipulated through the paper selling of the assets, and we could get into some arguments about maybe how dangerous it is for Bitcoin to have an ETF of any kind. But nonetheless, we won't go too deep into that until the later parts. I think there's a later part for that conversation. So we could see downside to the $30,000 area. It'd be really nice to retest that, but I just don't think that's going to happen. I think we've already put in too much into the accumulation range at around 400 days here to really want it for the market cycle to end so abruptly here. Although, mind you, I thought we would just be getting to the $70,000 mark around now. Like if you look at my previous videos from October 2023, I thought around June 2024 would be getting closer to 70 grand. So we definitely expedited the process. We jumped up to that 72,000 real fast there. But for me at the moment, I don't see why we would want to turn bearish when the trend itself switched bullish and had so many days put into that accumulation period. It's just not how the market likes to play. So on the other hand here, this is Fetch on the daily. And when we look back, we can see that there's a pretty standard kind of like groove or sentiment between, look, we go through accumulation, we jump up, we go through reaccumulation, turn into distribution, go back into accumulation, jump up, reaccumulation, boom, distribution, redistribution. And now I'm making a bet that we are in accumulation of some kind. Now, we have not seen any of the bear clause flip on the alternative assets yet. So that'll be a big indicator that we are going bullish again, and we can basically just stay long for a while. But for now, like I said, with Fetch here, it looks like we're pretty cleanly bouncing between the 200 and the 314 simple day moving average. I suspect that we're going to continue to build that, and we may actually even see something that looks like a falling wedge take place here. And I'm not going to bet on that yet, but for now, we're probably going to bounce back up to the top of the range here for Fetch. Solana the other day, if you were watching my videos when we were at the bottom of the trading range, I said, pay attention here. It's very likely that we're going to move to the top of the trading range very quickly, and that's exactly what we did. We've moved almost all. We were at $185 today for Solana. If we look at the oscillators, we are definitely in the oversold territory. The RSI is starting to get up there. The MACD is losing pressure, and the stochastic RSI, although it has turned up as well. Once it crosses over that 80-point line, moving to the top of the range here is going to be a really interesting point to watch out for, because that would be effectively 1, 2, 3 reaccumulation ranges, which to me says this is the very last part of the market cycle to the upside. Taking profits as we go up here is super important. Again, not all the assets have performed this well. Solana's done very well staying within this trading range. As we saw with Fetch here, we actually fell out of the first distribution, second redistribution, and are in a secondary reaccumulation. So from the previous high, we're like down 153%. But also important to note here that when we first said go long on Fetch, we're still up almost 300%, and you had an 800% high at the very peak. And I did make videos here saying be very defensive with your profits and capital, because we're up 10x. And so many people commented on the videos at that time being like, oh, we're going way higher. Fetch is going to $15. It just merged with like the largest blah, 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 blah. Those were all great signs. Iggy Azalea making a celebrity meme coin is all great signs that we were near like a middle version of the top. We've seen this before too, where the market cycle will drive up massive pressure, go into a type of distribution before the finality of the bull market, which is almost usually a bit more exciting, but very short-lived. So I suspect that the next upcycle that we get is melt your face type movement to the upside, but also very short-lived. That's basically going to be time to get out of all of the assets and go into something else. Now, we could make an argument that the dollars are going to die and this is not a great time to be in dollars. But if you've watched my other videos, the idea that excess deaths are so high and how deflationary that pressure is going to be on the market, the fact that there's significantly more supply than there is demand for almost all assets at this point, because we've never really seen a reduction in population at this scale before. So we don't really have any way to measure that in. Like, we just don't know what happens when you start to go 50% higher, more people are dying on average than before. If you go to my Twitter, there's some really fascinating data that just came out of the Czech Republic that does not look good. You could be talking, I'll leave it at that because otherwise YouTube is going to kick me off. But if you check out Twitter, oh my dear God, It is so bad. Yeah, it is power off for people. It's so bad. And we don't know how to measure that in the market because it's just never happened before. But what I can say is the likelihood is that they're going to continue to print more dollars here in the very short future, and that's going to become part of our market cycle up. Now, whether it happens before or after the election, it doesn't really matter. The governments have no choice. They're going to print a bunch more dollars, and I think this is the first time you're going to see market melt-ups continually take place. So same thing here happened with Avalanche. You know, we saw a lot of big upside from October. From October when we first made our videos, we had a nice 4 to 5x. We're still sitting at currently like a nice 2x, which is decent. But again, these are our first two accumulation ranges turned into distribution very quickly. I got caught out on this one and got stopped out for Avalanche here around $50. But so as you can see, just a big market cycle to the upside, reaccumulation, distribution, redistribution. And now I think we are entering a smaller scale reaccumulation. Now, this actually doesn't look great. We closed below the 314-day simple moving average. If I were just looking at Avalanche, I wouldn't be super bullish. So again, there's cause for concern. If you're up in profits in any of these, it's good to enjoy them because we could see more downside. But again, it's only when we look at the larger kind of macro story for Avalanche here, which is just not wanting to load. I'm going to turn the bear claw off. Maybe that will help. We saw from the primary support to the very bottom of the spring, approximately 537 days of accumulation and a beautiful falling wedge. So even though this is kind of some dirty price action here, Avalanche has just not performed great compared to some of the other assets we are in. This amount of accumulation time leads me to believe that we're going to see another big market upcycle here. But again, it will be basically get the fuck out of the market at that point because it's game over. And as you can see, that something very similar happened in the previous market upcycle. Long-term accumulation, big upside, dropped around 40 to 60% before the finality of the bull market took place here. And I suspect that that's what's happening now. We basically saw the first stage of the SOS, and we're in the last kind of parts of the LPS phase here before we jump up, and then it's basically get the fuck out of everything because people are going to be taking profits, going back into dollars, and we're going to see a big market cycle shift over. So, I wanted to go with the S&P 500 day. I don't want to keep today's video too long, so I'm going to keep it a bit short and not look at all of the assets we had on the list, but nonetheless, what I think is important here, there's some mild conjecture that was breaking off the idea that if excess deaths are very high, this is just a question. I don't know the answer to this question. I don't think anybody does. If you have some thoughts, leave them in the questions, the comments below. Please subscribe to the YouTube channel as well. YouTube just keeps unsubscribing people, or I'm like somehow losing massive amounts of people on a daily basis. But I feel confident it's probably not you guys. It has something to do with YouTube. So check to make sure you've subscribed. Hit that little notification bell. That way, when we do post videos, you guys are instantly notified. We sent out our private members update the other day too, and that will be consistently coming out week over week. I'm just making them shorter. That way it doesn't feel so daunting in writing like a 12 to 15 page update or something. It's just quick, short, concise macro updates in the private email updates as well. So here, again, I think what's important to remember is that we went through something like, well, let's just focus on from primary support. From primary support to the kind of SOS and backup phase, we have 508 days of accumulation that we went in to get into this. And the fact that the stock market is up 36% since then is impressive, because all the way back here in July, when Michael Burry was of July of 2022, Michael Burry was taking out shorts. I was like, this is one of the dumbest things he's ever going to do, because if you want to short Pfizer, because that shit is fraud to the max. Short Moderna, because it's just massively scaled fraud, effectively. Watch, we won't get sued because it's the goddamn truth. This is also probably why YouTube fucks me over. So please subscribe to the channel, because we're not sponsored by Pfizer. Yeah, there we go. So that's how that game works, apparently. So 500 days of accumulation, 36% to the upside. It's really when we start to zoom out that things become kind of scary and people start to worry about the price of the stock market. Now, this is important to note. Yeah, here you can see the last like 20 to 30 years of the stock market. Both the 2001 crash and the 2008 crash just effectively turned into what would be market cycle bottoms. But I remember at the bottom here, people are like, oh, it's a double top. This happens quite often, even in accumulation. People will think it's a double top and then realize at the very bottom of the market when they're exiting that the next few steps are really the movement to the upside. Actually, Bitcoin is doing something very similar to this right now. And what's funny too is that they always get tricked. People always get tricked here. I remember didn't really make videos at this time, but I was studying and learning, and people are like, oh, look, it's a rising wedge. The market's going to fall. It's going to be the biggest market collapse in history. It's clearly not what happened. And why didn't that happen? It's because they're going to keep printing dollars, and assets are always more valuable than dollars. On the long term, that's important to remember. And with less people, as they print more dollars, it actually is going to have a negative effect for those who are not in the market. This idea of you will own nothing and be happy. Well, most retail owns nothing already. I don't think they're that happy. They seem pretty upset to me, but they already don't own anything. Now, if we take a look at our oscillators here, we are in the oversold territory for the stochastic RSI. The MACD is still generally pointed up. We haven't been oversold in the RSI itself, so I think we're going to continue higher. I think it's when we go to the daily range here, it starts to look like we are forming a bit more of an accumulation range as well. So something very similar here. My guess right now is that over the coming month or two into the elections, we basically form a range that does this, or like a nice accumulation range. And then we're going to know whether we break up to the upside, which is my guess, because there's just no reason for them to sell the assets and every reason for them to print dollars. Whereas I don't know why they would want to sell assets and keep dollars at this point. They're just releasing debt, giving people free education, free healthcare. They're just going to print. They're going to try to keep the masses as happy as possible. Through that printing, they're going to keep them high on the monetary heroin. Well, excess deaths continue to increase and fertility starts to drop massively. So be cautious of that. I don't think this is going to be a market cycle breakdown. This is going to be a market cycle melt up. I think that's the majority of people think the opposite is going to happen, which is good. Most people are not on this side of the thesis yet. So just where it's at right now, I suspect a weaker dollar and a stronger market system. Now, one of the other things that's important to remember is that to get up this high, they printed more money than ever before. I'm just waiting for some type of scare moment for them to start printing again. So we could see a drop actually that goes a little bit bigger if there's some type of fear that comes into the market, like nuclear bomb or biological weapons, all sorts of things that can come in and scare the shit out of the markets and more in general people. But for now, again, I suspect just a tight trading range here before we continue even higher. Once we get higher, then I'll be a little bit more concerned for like red flags coming into the market. But for now, that's it. Just a quick little update. Hope you guys are doing well. Remember, if you're in profits, we're up like 3 to 5x on most assets still anyways. So don't get too greedy. Just in case we do see that market cycle downside, you're going to have another opportunity to play. If we see some more confirmations in Bitcoin like we were looking at on the smaller time frames, we'll be good to go. Anyways, it's T with the Arcane Bear signing off for the rest of the day. We'll see you on the next episode.